Welcome to this CAMS exam preparation lesson on fraud and cyber-enabled crime. We will build from the basic definition of fraud through the digital attack methods criminals use and connect it all to money laundering and terrorist financing. By the end, you will understand why speed, remote access, and multiple institutions make these schemes so difficult to detect. Let us start with foundations. Before we explore the digital dimension, we need a solid understanding of what fraud actually is and why people commit it. Fraud is the intentional misrepresentation or concealment of material facts to obtain money, property, or services, or to cause another party a loss. For the exam, remember the four essential elements. First, there must be intent to deceive. Accidents are not fraud. Second, the misrepresentation must be material. It must matter to the decision. Third, the victim must actually rely on the false information. And fourth, there must be actual loss or harm. If any one of these elements is missing, the act may still be wrongful, but it does not meet the legal definition of fraud. The fraud triangle explains why people commit fraud. It has three components that must converge. Pressure is the motivation, financial stress, mounting debts, or lifestyle expectations the person cannot legitimately meet. Opportunity is the gap, weak internal controls, excessive access, or inadequate oversight that makes the fraud possible. Rationalization is the self-justification. The perpetrator tells themselves it is acceptable, perhaps thinking they deserve it or will repay it later. On the exam, remember that all three must be present. Remove any one, especially opportunity, through strong controls, and the likelihood of fraud decreases significantly. Now let us look at the warning signs that should trigger further investigation. Unexplained urgency. A customer insisting a transaction must happen immediately with no clear business reason. Inconsistent documentation. Details that do not match across forms or that change between interactions. Reluctance to provide identification. Avoiding standard verification steps. And transactions structured just below reporting thresholds. A classic indicator of someone trying to avoid detection. The key insight here is that red flags rarely appear in isolation. A single indicator might have an innocent explanation, but when you see clusters, urgency combined with inconsistent details and threshold avoidance, that pattern demands escalation. Now we move into the digital dimension. Cyber-enabled fraud takes traditional fraud methods and amplifies them through technology, adding speed, anonymity, and cross-border reach that fundamentally change the detection challenge. Let us walk through the major types of cyber-enabled fraud you need to know. Identity theft uses stolen personal data to open accounts or obtain credit in someone else's name. Account takeover, often called ATO, means criminals gain control of existing accounts through credential theft or SIM swaps. Payment card fraud involves cloned or stolen card data used for unauthorized purchases. Fraudulent wires occur when manipulated instructions divert legitimate transfers to criminal-controlled accounts. And business email compromise, or BEC, uses spoofed executive emails to trick staff into authorizing large payments. For the exam, distinguish these clearly. Identity theft creates new fraudulent relationships. Account takeover exploits expertise exempt. That distinction affects which controls are most relevant. Behind most cyber-enabled fraud is social engineering, manipulating people rather than breaking systems. Phishing uses deceptive emails or messages to harvest credentials. Spoofing forges sender identities so communications appear legitimate. Vishing does the same thing over voice calls. Malware is covert software that infiltrates systems to steal data or monitor activity. And ransomware encrypts a victim's data and demands payment for its release. Notice that the common thread is deception. Technology is the delivery mechanism, but the vulnerability being exploited is human trust. Why is cyber-enabled fraud so much harder to detect than traditional fraud? Three factors compound each other. First, transactions settle in seconds globally. There is no natural pause for review. Second, remote access eliminates physical presence. Criminals operate from anywhere without ever entering a branch. Third, funds are split across multiple institutions and jurisdictions simultaneously, so no single entity sees the complete picture. Add rapid conversion to virtual assets and the trail fragments further. For the exam, remember this distinction. The question is not whether controls exist, it is whether controls can operate at the same speed as the threat. That is the core challenge. Now let us connect cybercrime to money laundering and terrorist financing. The proceeds of cyber-enabled fraud do not sit still. They enter the financial system and must be laundered. Here is how the laundering loop typically works with cybercrime proceeds. Criminals steal funds or data. They convert those proceeds, often into virtual assets like cryptocurrency. They layer through multiple exchanges and wallets to obscure the trail. They transfer across jurisdictions to exploit regulatory gaps. And finally, they integrate the funds as apparently clean wealth. This cycle can complete in hours rather than weeks, which is why traditional batch processing monitoring often misses it entirely. A critical exam distinction: money laundering versus terrorist financing. Money laundering is about the origin. Proceeds come from crime, and the goal is to disguise where they came from. Typically involves large sums moving outward through complex structures. Detection focuses on unusual patterns. Terrorist financing is about the destination. Funds go toward an illegal purpose, and the goal is to disguise where they are going. Often involves smaller amounts moving inward. Detection focuses on destination analysis. This matters because the same cyber-enabled transfer can be either or both. Your analytical approach must consider direction, not just amount. Given the speed and complexity of these threats, institutions must calibrate their controls proportionately. Static, rule-based systems alone cannot keep pace with real-time fraud. Behavioral analytics detect deviations from established patterns. Device fingerprinting identifies suspicious access points. And real-time transaction monitoring catches anomalies as they happen, not hours or days later. The control principle to remember: your defenses must match the velocity of the threat. If your review process takes 48 hours, but the funds move in 48 seconds, you will miss the fraud every single time. Let us look at practical mitigation measures that institutions should implement. Real-time transaction monitoring is essential, not just daily batch reviews. Multi-factor authentication adds friction that stops many account takeovers. Cross-institution information sharing helps overcome the fragmentation problem because no single bank sees the whole picture. And enhanced due diligence on high-risk channels like virtual asset on-ramps addresses the conversion vulnerability. The best practice is layering these together: preventive controls to stop attacks, detective controls to identify them, and responsive controls to contain damage when prevention fails. Let us test your understanding. Here is the first question. Which element of the fraud triangle explains why a perpetrator believes their actions are acceptable? Is it A. Pressure, B. Opportunity, or C. Rationalization? Pause and think about which element involves self-justification. The correct answer is C. Rationalization. Rationalization is the self-justification a fraudster uses to reconcile criminal behavior with their self-image. They might tell themselves they deserve it or that they will pay it back. Pressure is the motivation that drives them, and opportunity is the gap in controls that makes the act physically possible. All three are needed, but only rationalization addresses the perpetrator's belief that the act is acceptable. Question 2. A customer's account suddenly receives multiple rapid wire transfers from different countries, immediately followed by conversion to virtual assets. Which factor most complicates detection? Is it A. the customer's nationality, B. speed of transactions across multiple jurisdictions, C. the size of individual transfers, or D. the customer's account tenure? Consider what makes cyber-enabled fraud uniquely challenging. The correct answer is B. Speed of transactions across multiple jurisdictions. Cyber-enabled fraud exploits both velocity and jurisdictional fragmentation simultaneously. Funds move in seconds across borders, making it nearly impossible for any single institution to see the full picture or intervene before the money is layered further. Nationality, size, and tenure may be relevant factors, but none of them create the same systemic detection challenge as speed combined with cross-border movement. Final question. How does terrorist financing typically differ from money laundering in the context of cyber-enabled crime? Is it A. Terrorist financing always involves larger amounts. B. Money laundering disguises the origin, while terrorist financing disguises the destination. C. Terrorist financing uses only virtual assets. Or D. Money laundering is not a predicate offense for terrorist financing. Think about the directional distinction we discussed. The correct answer is B. Money laundering disguises the origin, while terrorist financing disguises the destination. This is the core directional distinction. Money laundering conceals where funds came from, the criminal source. Terrorist financing conceals where funds are going, the illegal purpose. This matters for the exam because detection strategies differ. For laundering, you trace backward to the source. For terrorist financing, you trace forward to the end use. The other options are factually incorrect. Terrorist financing often involves small amounts, uses all types of value transfer, and money laundering can indeed be a predicate offense. Let us recap the key takeaways from this lesson. Fraud requires 4 elements: intent, material misrepresentation, victim reliance, and actual harm. The fraud triangle shows that pressure, opportunity, and rationalization must all converge. Cyber-enabled fraud includes identity theft, account takeover, card fraud, fraudulent wires, and business email compromise. Social engineering, phishing, spoofing, malware, and ransomware is the delivery mechanism. The detection challenge comes from speed, remote access, and fragmentation across multiple institutions. Money laundering conceals the origin of funds, while terrorist financing conceals their destination. And effective controls must be real-time, layered, and proportionate to the risk. Your exam tip: whenever a question involves funds moving through digital channels, ask yourself whether the scenario is about concealing the source or the destination. That single distinction will guide you to the correct answer.